Hey everyone, and thanks for stepping back into the cryptoverse. Here we are again with NFA Live every Thursday morning, at least if you're on the East Coast in the United States. We have Guy from Coin Bureau. How's it going, Guy?
Good, thanks, Ben. How are you?
Doing great. And Rob from Digital Asset News. How's it going, Rob?
Pretty good. Pretty good. Thanks for having me back.
Did you get a haircut, or am I imagining things?
I got a new computer, which has a better
Okay.
camera. So now people can actually, like, every time I go to some events, they're like, you don't look like you look on the videos. I get that, and I didn't think you were that tall. I get those two things, but that's about it.
I see. Well, it's great to have you guys here. If you guys are not subscribed to either Guy or Rob, link to their channels are down in the description below. We just rotate where we do this. Next week, it'll be on Rob's channel. So make sure you guys go subscribe. All right. We've got some questions to get into. We'll start off with Rob's favorite topic, Bitcoin dominance. It actually just hit 66%. And I think I remember maybe like a year ago, we were talking about Bitcoin dominance. We were like, all right, where is it going to go? And Rob, I think you said 66. So I'm curious. I mean, that seemed like a reasonable target. Here we are. We're basically at 66 now. It's at 65.76. What's really interesting is if you exclude stablecoins, it's actually at 70%, which is getting pretty high up there. So I'm curious, Rob, what are your thoughts now that 66% has been hit? You think it's going to keep on squeaking a little bit higher, or are you at the pivot point?
Well, look, I mean, I'm going to do a video today on Bitcoin dominance. It'll be at least an hour long, and everybody can enjoy that. But my thoughts right now, as far as Bitcoin dominance, it does make a lot of sense as to why it's happening. And of course, when we look back, we're like, oh, it's so obvious. It's so obvious, right? New president comes in, the administration's very bullish. They do a Bitcoin strategic reserve. We get the SEC overhaul, the CFTC overhaul. We get banks coming in. So of course we knew it the whole time. And that is, of course, sarcasm. When I look at this, and guys can touch on this about altcoins and meme coins, it's just that, retail got destroyed with memes and a lot of alts because it was all just a little speculation. And there are very few that are going to actually do something. And we'll talk about it later. But I mean, when you look at Bitcoin and you look at just MicroStrategy and then putting it on the balance sheet, other companies coming in to put on the balance sheet, sovereign wealth funds, the ETFs, it just kind of goes and say, well, that is probably the safest bet. And markets, I'm not going to say smart money, but big money, they don't like some unknowns. So I think with Bitcoin, obviously we're here, but hindsight's 2020. But I see it, I mean, without stable coins, 70%, sure. Sounds pretty good to me.
It's getting pretty high up there, 70%. I mean, excluding stables. When I saw that the other day, I was like, wow, like it's getting pretty high. Guy, what are your thoughts on dominance? I mean, hit 66%. I mean, it's basically now, if you include stables, Bitcoin's basically 2/3 of the cryptoverse. If you exclude stables, it's 70%. I mean, the train ride on the Bitcoin dominance train has gone on for a really, really long time. And I think a lot of people are really starting to wonder, like, when's it ever going to end? What are your thoughts on all this?
Well, I think it's really interesting because I was going to ask you if you could pull up from your wonderful website Bitcoin dominance X stables, because I was very curious to know what that was. If I remember rightly, I think in the last cycle, dominance topped out at 73%. I think it was around that, so around sort of 73%. But obviously, in that last cycle, stable coins were way smaller than they are now.
There you go.
Oh yeah, that would be.
So yeah, you can see last cycle, excluding stables, we went all the way up to, what was this? 70, almost 74, almost 74.
Wow. Yeah.
Right there. We're almost there. I mean, it looks like, you know what though? It looks like when QT ended last cycle, excluding stables, dominance topped at around 72.
Right.
Yeah. Okay.
Okay. Because I mean, further to what Rob said, obviously the demand for the demand for Bitcoin is all around us. We're seeing these sovereign wealth funds and company treasuries and ETFs, etc. So the demand is certainly there. And then when you look at the wider crypto market, where is the what is their demand for other than Bitcoin? And the answer is stablecoins. So and plus all the sort of regulation that's coming down the pipe now. There's the Genius Act, I think, that we might have talked about last time. The big regulation coming is for stablecoins. So that seems to be the growth sector. That seems to be probably the only sector of crypto at the moment that can actually dent Bitcoin dominance meaningfully, unless we were to see, I don't know, like a big rally perhaps for ETH. Might be, obviously as the second largest asset by market cap, maybe that would be enough to sort of bring dominance down. But I kind of feel really probably the only thing that is going to actively start bringing Bitcoin dominance down is sort of an increase in Bitcoin dominance, because that would suggest that Bitcoin's price continues to rise. And I think that there must be a point. I don't know what that price point is, but there must be a point for Bitcoin, you would imagine, based on what we've seen in previous cycles, where people will go, okay, do you know what? I've made a lot of profit in this. Now let's explore some of these other coins. That is what has happened before, I guess. But again, going back to what Rob said, the idea, ETFs and corporate treasuries and national reserves. Does that capital rotate out and into altcoins? Probably not. So yeah, I mean, I think you can imagine a scenario where Bitcoin dominance, I don't know how high it will go, but I think it's certainly got further to run from here. That's for sure.
Someone says, not that one. What are the chances? They say, "Hi, Rob and Guy. What are the chances that Bitcoin dominance drops in the next 6 months?"
What? Guy, take that one.
I mean, I think there is a decent. I would say probably a sort of 50% chance that it drops in the next 6 months. But at the moment, as things stand, the only way that I can see that dropping is via demand for stablecoins, which I think is only going to, the total market cap of stablecoins, I think, is only going in one direction. So that could impact Bitcoin dominance. But in terms of anything else, in terms of what those profits from Bitcoin, that capital from Bitcoin would bleed into, it's much harder to say, other than staples.
Yeah, and I'll just say that I just hope that it doesn't drop too much, because that's not good for my bags, and that's what it's really all about.
That's the most important thing.
I think the best chance for dominance to go down would be probably November, because that's the last 2 years. That's kind of when it went down for a little bit, November. I don't really expect it to go down until then, though. And even then, it's like, who knows? It might just be down for a few months, then right back to going back up again.
Yeah, super cycle, Ben.
Yeah, exactly. So next question. I want to go over to really quick. I want to go over to what's going on with the Fed right now, because we actually have some questions in the chat where someone says, "Are we getting rate cuts in July or September? I'm confused." We have a question here that there's been a lot of drama recently. Well, mostly one-sided drama where Powell's just doing his thing and Trump keeps calling Powell an idiot. And I mean, like, I guess the question is, obviously Trump wants Powell to cut rates. And, I think that it sort of makes sense, because we actually had the revision this morning. I think Q1 GDP was negative, so you would think that in most circumstances with negative GDP, it would warrant a rate cut. However, we are not getting one, and Powell has been pretty clear as to why. It's because they think that tariffs are going to have some effect, even though they haven't had an effect yet. So I guess the question is, do you think Powell is actually justified in not cutting rates? Because if you look at CME Group, I don't think they're planning on cutting until September, according to what market expectations are. So do you think that Powell is justified, or do you think that Powell is waiting for something to happen with inflation that's never going to happen? Like maybe it doesn't spike up, and instead they're just waiting, and maybe they end up being too late. So I guess, what are your thoughts there, Guy? I'll start with you.
Yeah, I think it's worth pointing out. Obviously, the last meeting was last week, wasn't it? Where they held steady again. I think what came out of that, though, was that some Fed governors, more than previously, are now in favor of a cut next month in July. But Powell has always said he watches the data, and I've always inferred from what he said that inflation is the priority. So far, okay, so we now have figures showing a decline in GDP. I mean, a fairly tiny decline in GDP. But I've always sort of imagined that really Powell sees inflation as the worst case scenario. Inflation is the biggest thing to worry about. So far, the data has said that inflation is declining under this current regime of rates, and that the economy is holding up pretty well. So I think he's, in that sense, I think he's justified in keeping rates where they are, because I think he knows that inflation is far more destructive. And if it's allowed to flare back up on his watch, then that's how he'll be remembered. And I think it's really important to consider Powell's position. Also, the fact, as you mentioned, Ben, Trump is now talking about replacing him. He's got I think he's got just under a year left now. And I think his legacy, he will be focused on his legacy, and he will want that to be that he got on top of inflation and that he kept it down, because he'll remember what happened in the 1970s. And I think if he was to ask a rhetorical question, it would say, well, do you want rates around 4% now, or do you want inflation to tick back up and rates to have to go back, to double figures in order to tackle it? And I think it's really interesting that you've got, Trump versus Powell now going on, because, Trump is a politician, isn't he? So like all politicians, he is focused on the short term. He just wants to do what's politically expedient. And that's not a comment on Trump personally. That's a comment on any politician. That's what they just want to do, what's politically expedient in the moment, to what will keep them, keep voters happy. Powell, on the other hand, is a public servant. His time is almost up. I think I kind of feel that he's saying, no, if I'm gonna leave office in a year's time, I'm gonna leave with inflation, under control. That's what I want to achieve. And I kind of think in the long term, he is justified in doing that, because we know how devastating inflation is.
I haven't really thought about it like that, but I think you're probably, it's a good point. If he's leaving next year, so if that's the case, does he really, what would he do if inflation spikes right as he heads out? Like, what would he be accomplished? Absolutely nothing.
Yeah.
That's actually a really fair point. Maybe that explains why he's so against cutting. And if you look at CME Group, it looks like they're expecting a rate cut in September, which is exactly when they cut rates last year, around September timeframe. Yeah. Rob, do you have anything else to add to to that question as to whether you think Powell is justified in not cutting rates right now?
I'm looking in the chats, and it says Guy hates U.S. government, LOL. And I got to tell you, like when I look at it, I see what Powell's doing, and I immediately I think to myself, just cut the rates. And unfortunately, that's not probably a good plan. Hey, could you, Ben, do me a favor, just throw up this screen real quick, because I think what people, and I had to go through this myself. And before anybody says Rob hates Trump, if you go onto any of my videos, you'll see it both ways. Sometimes Trump is doing great things. Sometimes Trump is being crazy. Sometimes Powell is doing great things. Sometimes I'm just a little bit speculative. But I think what Powell's going through is this. Is it going to be stagflation? Are we going to see slow economic growth? Well, Guy just pointed out we had negative GDP growth. And I think today we get the revision numbers for Q1. and we'll see where it comes. Right now, it's at negative 0.5. And he's worried about if it's stagflation, it's economic growth is down, inflation up, unemployment up, I should say. So where does that leave us? Well, this is it from trading economics. You can see the GDP over the years has been pretty damn good. And just last one, Q1 2025, we're in negative. That is what I would believe to be a slower economic growth, a little bit. And then, of course, if we take a look at inflation, this would touch on what Guy talked about. Jerome Powell doesn't want to come out here and be remembered as the Fed chair that is Burns, as he saw inflation go from 5% drop down to, gosh, what was this, 2.6, then all the way up to 10%. And then they cut rates, and then they yo-yoed, and then Volcker had to come in. And no one remembers Burns. Everybody remembers Volcker. And Volcker is the one that did the hard thing, which is like, we're gonna start raising rates. That's just kind of how it's gonna have to be. And of course, we're gonna avoid a depression, and he did. And that's why everybody's like, Volcker. And the guy before him, who the hell was that? Yeah. So we have that. And then of course, let's just take a look at 2021. We've seen, here's the inflation rate. I mean, we're not doing too bad over here. So, I mean, inflation is down to 2.5, but that's not at 2% where they want it to be. So inflation, has it increased a little bit? It has gone down, but it's not at 2.5%. And then unemployment, that's been actually holding pretty steady. So if I take a look at this, and then of course people will say, what about the, non-farm payroll? It's been down, total non-farm payroll, so that's not a good sign. But then you take a look at stuff like non-farm private payroll, and it's actually gone up. So the job openings, I should say, is down, but people have a lot of jobs, and the unemployment rate is low. So going back over all of it, I think there's a good chance that, just like what Guy was talking about, he wants to keep the rates at reasonable levels. And then as we go up as far as like inflation, because if you take a look at this, I mean, he did raise in 2022, the Fed funds rate went from essentially nothing. And then over here, there actually was a little bit of inflation, and then it's gone down. But the difference is, I think the big difference would be this. And he's worried about tariffs, about what that actually means. So yes, in the past, you're going to hear people say, oh, I think it was J.D. Vance who said, Powell raised rates when inflation was actually up, or he cut rates when inflation was actually up, and he should do it again. But in reality, if you take a look at the GDP and where things are going, he has to play a little bit safer. And so right now, I'd love him to cut rates. That would be great for my bags, but I don't think it's great for the economy. And if he waits another couple months, so be it.
But also, okay, as you mentioned, Rob, he brought Powell, and as that comment also pointed out, it's the FOMC as a whole, isn't it? The Fed brought rates up from pretty much zero to what did they peak at, like 4.75 or something like that? 5.5. Gosh. So, and they're currently above 4. Now, if the Fed makes a cut next month at which I think is when the next meeting is, what are they going to cut by? 25, maybe 50 basis points? Is that going to make much of a difference? I mean, I guess you could argue that it might have a psychological effect on the markets and say, well, look, the rate cutting cycle has begun or is continuing or whatever. Mm-hmm. But is a max 50 basis point cut going to really make any difference? Rates are still a long way above zero, which I think is what so many people, especially in crypto, are used to, because we're used to that post 2008 zero rates, hell for leather for growth, and that's just not the world we live in anymore. It's changed dramatically. So I do wonder what real effect a couple of rate cuts would really have.
Well, the effect that people want is win alt season.
This is very true.
Yeah, that's.
But
what
you're right.
Want.
I mean, in the overall economy, you're right. What's another 25 basis points going to do? I don't know. I guess they'd have, if they did a string of 25 basis points, maybe like September, November, December, then you get down to say a 75 basis point in terms of rate cuts. You know, because I guess if the Fed funds rate goes to say 3.75, is that low enough? I don't know. I don't know where the magic number is, honestly.
Yeah.
The neutral rate. I mean, I think some people approximate the neutral rate as the 2-year yield. And the 2-year yield right now is right at 3.74%. So you could argue that 75 basis points of rate cuts would basically get you to the neutral rate.
Yeah, it's true. But I mean, there's that, and there's also, I think someone put in the comments, it's about debt too. When we reduce those rates, because we're paying massive amount for interest. If we could just cut that, it'd be nice. I think that's a bigger thing that Trump wants, but it is where it is.
Someone says that people want 4 to 5 mortgage rates. The problem, and I think a lot of people have to remember this, the Fed does not control the long end of the yield curve, right? Like they when they cut rates in September of last year, the long end of the yield curve actually went up after that. So you have to remember, like, they don't actually control the long end, they just control the short end. And if they cut too aggressively and inflation were to come back, then the long end is just going to go up regardless, if they're cutting or not. So you have to be careful. I mean, obviously they don't control that end of the curve. The next question, let's go over to Bitcoin. So, you know, there's been a lot of geopolitical events recently. We're not going to get into all of them, but obviously there's been a lot of geopolitical events. Everyone on Twitter or X now is a geopolitical expert except me. And I am curious though. I mean, Bitcoin has mostly shrugged off all this stuff. And so my question is do you think that Bitcoin is mostly, you know, is the price action of Bitcoin, is it mostly just based on liquidity? Is it mostly just based on, you know, the cycles, right? What do you think it's mostly based on? Rob, I'll start with you.
That's a good question. And like we can look at liquidity. And I think one of the big narratives that I see around X is global liquidity, M2 global liquidity. And then we take a look at just the US M2, and yes, it can definitely be that way, but there's like a lag effect. So if I take a look at it, we can, I mean, just for everybody can say, okay, well, that does make sense. Here's the M2 money supply globally. And global supply year over year and year over growth rate. As we take a look at it, we can see that if we just overlay Bitcoin, I mean, come on, it makes a lot of sense, right? I mean, without liquidity, where are we going to go? And that's global. Now, if we take a look at, oops, that's not it. If we take a look at M2, the US, I mean, the US is good at a couple of things, obesity and printing money, like I've said. And for this one, I mean, if you really zoom in, where are we? I think we're at, for M2 money supply, 21.75 trillion in 2022. Now we're at 21.942 trillion. So, I mean, there's liquidity there. So that's one of the narratives for sure. But, you know, I was on DCA live with James and Marty this week, which is pretty good. And Marty was talking about, where'd it go? Oh yeah. Really just comes down to a lot of this, longs and the shorts and liquidations and where we're at. If everybody can go to the site Bitcoin Counterflow, you can just see where the massive amount of liquidation volume is at. Right now it's at 108,600. And then we come down here, we're looking at 97.7. And that's where I think a lot of the things go. And because there's thin order books, there's a lot of people playing the leverage plays, 10, 50, 25x, that you can take a look at that and see where things are going. Now, is that going to be the end all be all? Probably not, but it's a good starting point to where things are. So I think it's that, it's ETFs, it's, you know, which has grown over time. And then it's, of course, the treasuries. And I mean, as the businesses come in and they start talking about how much they put on there, it's just going to be a war and it's going to be a narrative. And that's going to boost the price as well. But it has to come down to liquidity first, and it all starts with macro.
Fair enough. Guy, what are your thoughts about what's the biggest driver of Bitcoin price action?
Liquidity, but Michael Saylor's liquidity.
This is true.
How flush Michael Saylor is at any one particular time. No, I think I agree with Rob. I mean, you know, you look at that again. You look at that M2 overlaid over Bitcoin, and it tracks really well. One theory I've got, one slightly alternative theory that I've got or that I've heard that I think is interesting is this idea that obviously now quite a lot of the geopolitical events that you alluded to, Ben, especially in the last couple of weeks, have actually happened at weekends when traditional markets are closed. And I think it's really interesting to see how Bitcoin, how BTC reacts during events like that, because that sort of suggests that perhaps BTC is trading as a sort of 24/7 liquidity proxy for all risk assets at times like that, when traditional markets are closed and people are seeing something happen in real time. They're going, holy shit, they're dropping bombs on this lot are dropping bombs on this lot, or whatever, this is happening. How do I play this? Bitcoin is at a weekend is really the only way you can do it. So I do it might be a bit facetious to suggest that that's the sole driver, but I do wonder whether that is contributing in some way. In the sense that TradFi, if you like, is so clunky and obsolete now in a way. Now that you've got something that trades 24/7, 365 like Bitcoin and obviously crypto in general. I just wonder how much of that price action, how much of that money exiting or flooding into Bitcoin over those periods is because people don't have any other means to speculate at that time. They don't, the idea of waiting till the opening bell on Monday is just too, it seems too distant. So I wonder whether that has an effect. I think it's certainly an interesting phenomenon.
Yeah, it is great that we have some risk assets to watch on the weekends when traditional markets are closed. For sure. I like the idea of it's sailors' liquidity. That's true. Probably not wrong. The next question is, I've noticed the dollar is continuing to plummet, just like it normally does in post-election years. We saw something similar happen last couple of cycles. Actually, even in 2017, when Trump was in office, we saw the dollar drop a considerable amount as well. So I guess my question, do you think the devaluation of the dollar is reflective of relative weakness by the USA right now with respect to the rest of the world? Normally, normally the US markets tend to outperform the rest of the world, but there are times when the rest of the world starts to outperform. And I can't help but notice it seems like we're in one of those times. Even if you look at, the German stock market, I mean, it just screamed to new all-time highs, weeks before the S&P. And in fact, the S&P is not even at an all-time high yet. The NASDAQ is. The S&P is really close, and there's a good chance it will soon. But I'm curious if you think the devaluation is reflective of relative weakness. I was even looking, Bitcoin USD has put in new all-time highs, but Bitcoin against the euro has not actually put in a new all-time high since January. I was actually surprised to see that. And also against the yen, I believe it also has not put in any all-time high. So, how do you perceive what's going on right now at sort of this global level where you have the dollar being devalued? Do you think it's more of the same, like the last two post-halving years or so? We saw the dollar not do that great, and then maybe it'll go back up again next year like how it normally does in midterm years? Or do you think that something else is going on? Like maybe there's a broader trend shift that's occurring. Guy, what do you think?
I kind of think it's reflective of two separate things. I think it's reflective of the fact that a lot of global investors, maybe a lot of US-based investors as well, but a lot of investors in general are unsure about what comes next, and that's because of Trump, because he's so unpredictable, and he's so kind of mercurial in a way, isn't he? The world is visibly changing, because has visibly changed. The world order is visibly changing, and I think NATO is a great example of that. Until recently, NATO seemed like a really sort of strong organization. Trump has come in and said that he's not all that happy with it. I mean, I know they had the summit this week and it all seems sweetness and light, but as something I read pointed out, Trump's opinion on that could have changed by the time he gets back to Washington or Mar-a-Lago, wherever he goes. So he's very, very difficult to predict. And there is this sense that the world is changing, and that maybe overexposure to the USA, or to US markets, to the dollar, is something that you should hedge against, because Trump is much harder to read than previous presidents. So there's that. I also kind of think it's reflective of the fact that there is the 800-pound gorilla in the corner of the room, which is $37 trillion of debt. I think so many investors. I mean, there must be people still buying US bonds now, but I mean, there must be just as many, if not more, going, do I want US bonds? Do I want dollar exposure, given the size of this debt pile? And of course, the one big beautiful bill, or whatever it's called, is just more spending, and that's what Elon Musk came out and was so offended by, wasn't he? He's just like, this is just more money on the debt, and I think that is impossible to ignore as well, because it'll be 40 trillion by the time Trump leaves office, and no one has really come up with a credible way to get out of that. And so I do wonder whether that is contributing as well. People are just like, do I want exposure to $40 trillion worth of debt? Maybe not.
I think as Lynn Alden says, nothing stops this train, right?
Yeah.
Yeah, that is true.
No politician's going to be the one to say, all right, let's actually get things under control, right? They're just going to kick the can down the road. Rob, do you have anything to add to that? Or
yeah, I will say that, if you take a look at it, every time Dixie dollar strength of dollar goes up, Bitcoin usually goes down. I mean, not every single instance, but if you take a look at then, when I believe you said DXY is down right now, so Bitcoin's up a little. Bitcoin's up a little bit.
Yeah.
And you can go back, I mean, all the way to 2011. I've talked about this on my channel a couple of times. So there's that. But just to piggyback on what Guy said, actually what you said as well, Ben, and you talked about how the Bitcoin hasn't put an all-time high to the euro, to the yen. And I think that's like what Guy was talking about, which was there's just a little bit of an uncomfortable feeling about the dollar and kind of shifting things politically and geopolitically worldwide. But it goes to show you, like, this will be the last question. The next narrative is stablecoins, because this is a beautiful opportunity for America. They say, okay, well, you don't want the dollar, you don't want the bonds. Okay, that's great, that's fine. Let's roll out these stablecoins. Let's roll out a Genius Act. Let's get everything together. And then if you're going to back your stablecoins, which, let's be honest, what is everything priced in? It's not in the yen. It's not in the euro. It's a dollar. And because of that, they're going to say, okay, well, you want to keep playing in this game? Great. Here's a stablecoin. Back it by the dollar. Back it by treasuries. And that's what's going to happen. And that's why they're pushing this so hard. And that's why Trump knows. And that's why David Sachs knows it. So I think moving forward, that's the next narrative. And that's why I've been harping so much on this on the channel.
Yeah, that was the next question. What's the next narrative for the second half of 2025? Rob already answered it. Oh, by the way, if you guys have any questions for Rob or Guy, leave them in the comment section and we'll try to get to those in a minute. But Guy, do you have anything different? I mean, I know you've talked about stable coins a lot before as well, as being a narrative, but do you foresee any major narratives for the second half of the year?
Yeah, stablecoins definitely. I also think tokenized stocks, which you can, if you like, you can sort of fold into sort of RWA's real world assets as a whole. But tokenized stocks is really interesting. Like you're seeing, I mean, Kraken is already listing tokenized stocks. I think Robinhood obviously already does. Coinbase is going for it as well. I think we're going to see that. I think is just going to accelerate over the year. And obviously you need the regulatory environment that you can do that in, but it seems like we're gonna get something like that. We're gonna get regulations that allow it. So yeah, I think we're gonna see this. And someone pointed out it's very interesting to see, on the one hand, Coinbase, traditionally a crypto exchange, and on the other hand, Robinhood, traditionally equities. and they're both starting to move towards each other's lines of business. Because I think the future probably is a one-stop shop where you can get exposure to tokenized probably everything. We have and as Rob said, we have tokenized dollars already. We'll have tokenized stocks. We're in the middle of putting together a video on just all the stuff that's happened in the real world asset space just this year, and it's crazy. Like the big banks are into this, the asset managers are into this. Real estate is fascinated by real world assets, by the idea of tokenizing. Tokenizing real estate, tokenizing buildings, and letting people own. The opportunities there are just incredible. So I think probably tokenized stocks are the first or the next, if you like, iteration of that RWA narrative, with probably way more to come. That would be my guess, along with stablecoins for this year. I think there are a couple of other potentially interesting ones, but yeah, tokenized stocks would be top of the list.
One question is, how will they control stablecoins like they do the dollar?
Well, yeah, it's a good question. It's a good question. And I mean, think Circle and Tether have the ability to freeze balances. And actually, I think Circle have done it a lot more than Tether have.
They've both done it.
They've definitely both done it. Or maybe it's the other way around. Maybe Tether's actually freezed more than Circle. But anyhow, that's very possible. These things are programmable, and I think that will have been a big part of the pitch to people, to regulators, to people in government. It's like, look, I know you think these things are, operate outside the financial system and are completely uncontrollable and stuff. It's like, they're not. The government puts in a call to Jeremy Allaire's office and says, you freeze this lot right now. What's he going to do? Of course he's going to say yes. And like Tether, I think are probably very much the same. They don't want to defy national governments and be like, no, let's let people do what they want. But these things are really, really programmable already, and probably will become more so.
Yeah, true.
Hey Ben, real quick, because I know people, we talk about stable coins and people are like, who cares? Because I can't get rich off stable coins. So what really matters? If you could throw up this chart, this is from Visa. And if anybody wants, if anybody should be tracking stablecoin and its dominance and things that are going on, it'd be Visa, because they stand to lose a lot as far as payments globally. If you just go to visaonchainanalytics.com, and this is what Guy was talking about as far as like what's being used the most. USDT and USDC are the lion's share. It's like 92% of all stable coins and all transaction. And the big thing is, how does this work for me? All you got to do is just figure out which chains are using the most as far as Tether and USDC. And right here, you can see it's very simple. Tron, as of June, was 234 billion. This is in, what is this? Stablecoin transaction volume. And that's in June. Going back last year, Tron, Ethereum, Tron, Ethereum, Binance Smart Chain, Solana, Base. And then if you take a look at not just the volume, but take a look at the transaction count by blockchain, it's the same thing. Binance Smart Chain, Tron, Solana, even Polygon, which is kind of crazy. Tron, Binance Smart Chain, Solana. So like, I can't tell you how it's going to work out, but if you take a look at those chains, there's a reason why they're in the top 10. I think they're going to stay there. And that's one of the possibilities for alts.
Speaking of alts, Precarious wants to know if you think there'll be an alt season this cycle.
That's for Guy and Ben to answer.
Well, I'd hate to talk about Precarious alts particularly, but
talk about Rob's. Talk about Rob.
I'll talk about Rob's.
Talk about mine, because I probably own it.
Look, I think it is possible. We talked about rotation from, the classic definition of alt season is a rotation out of Bitcoin and into altcoins. That is, I don't think we're going to see that on the same scale as we've seen in previous cycles. But I still think we could see increased inflows into altcoins. If nothing else, because I think people are, there's certainly a gambling aspect to it as well, and altcoins is a very broad banner here, but I think there's certainly people are going to be looking, chasing the sort of returns that really only altcoins can give you. So I think there is a chance, but as I've said before, I kind of feel like it's going to be a slightly different paradigm now, because I just can't see the whole altcoin market going up like it did in 21 and in 17. I think we see localized pumps. I think a lot, there's scope for a lot of altcoins to do really well, especially ones with strong fundamentals, I think. But I think the pumps are going to be localized. They're going to be maybe a bit smaller than they would have been in the past, just because there's such a massive choice of altcoins to go for. And I think they're going to be a lot more short-lived. I think there's just going to be more and more rotation. So I think you've just got to be more nimble. I think a classic alt season, like I said, is just harder to imagine. It's harder to imagine such a large proportion of the capital tied up in Bitcoin migrating into altcoin.
Someone says we're going to have a stablecoin season this cycle. That was kind of funny.
Woo!
Someone says, where was it? What do you mean? We already had 4 alt seasons this cycle. Which I think that's kind of, it leads to a lot of disagreements, because, for a lot of people that have been in crypto for a while, if you look at a chart like this, there has not been an alt season this cycle, right? I mean, Bitcoin dominance has just been going up for basically the last several years. I mean, it kind of bottomed out in late 2021, sort of mid 2022, and it's only ever been going up. So I think a lot of people think about like these short-term pumps as alt season, but alt season is when Bitcoin dominance just like falls off a cliff. And we haven't really seen that. We haven't really seen that this cycle. I actually saw a tweet earlier today, or maybe it was yesterday, where someone said that if you've joined crypto in the last 4 years, you've never even seen an alt season. And they're right? Like the Bitcoin dominance has not collapsed at any point in the last 4 years. So it is, I mean, yes, some people are going to claim that we've had 4 alt seasons, but these are just like lower highs, right? Like what I think they're looking at, or I think like, isn't like others Bitcoin a good way to, it's basically when you're looking at everything outside of the
top 10
of the top 10. Yeah, I think like others, let me show my screen. Yeah, again, I don't know why I stopped sharing it, but others Bitcoin right here. So if you look at this chart, I think what they're saying is they're basically saying that every one of these lower highs is basically an alt season, right? And that's not really what alt season is, right? Alt season is more like this, where it's just going up, not trending down. That's sort of the main difference, I think. So yeah, I mean, like there's definitely been times where you can make money on altcoins, but you haven't really had that long alt season like we've had in prior cycles. At least not yet. We'll see what the future holds. Let's see. What else? What do you got, Rob?
No, I was gonna say, I think some people think that like an alt season is when their alts pump. So like if you were holding like BNB and Tron and Solana, since you're like, hey, it was alt season for me. I don't know about you and Fartcoin or whatever, but mine was awesome. So yeah, I get it.
It was alt season and part of the cryptoverse, right? But not everywhere.
Right.
Yeah. Just like it's summer in one part of the world.
Yeah.
Winter in
exactly.
another.
Yeah, very small sliver part. That's it.
Yeah.
I saw another question. I wanted to. Here's another one. So this person's saying, what do you think the narrative is for next cycle? And that's kind of been the theme of this cycle, is like, gosh, it feels like we're doing everything this cycle. What are we even going to save for next cycle? What are your predictions for the cryptoverse out in like say 2030? If we can think that far ahead.
Wow. Now's the time to make absolutely wild predictions, because we've got 5 years for people to forget that we ever made them, and then we can delete this video and we'll be like, oh no, I never said that. I never said that.
No, just blame it on AI. Just blame it on AI. It was AI you said.
Yeah, it was an AI me. Yeah.
That's even if we're here in the future. AI is going to wipe us out anyhow.
Yeah, exactly. We're all going to be enslaved to it. Well, yeah. If you want to, yeah, I guess if you want a prediction, then it's some sort of AI integration. I'm like I've said before. I think one of the exciting aspects of crypto at the moment is the AI agent meta. You know, this idea of these autonomous bots basically doing on-chain stuff for us. And I think that is, you know, we're already seeing signs of that. We're already seeing, like, there are AI agents out there that you can go and deposit stable coins with, and they will go and farm it out for you in DeFi and get you the best yield. And you don't have to do anything. There's no swapping between chains. There's no swapping between wallets. There's none of that. And I think, like, obviously it's really risky at the moment because we don't know how well built these AI agents are. They haven't, you know, been properly stress tested, et cetera, et cetera. So it's very, very risky. But by 2030, I would imagine that probably the intersection, the utility of AI in crypto has reached, you know, has reached its peak, and we are probably not interacting with crypto ourselves very much. It's all being done for us. I think that, you know, that's my prediction for 5 years' time.
I can see it, and just like what Guy was saying about he's excited about AI agents. This is what it looks like to me. Like Ben has an angel and a devil on his shoulder, and the angel over there is like, hey, it's gonna be the great thing of all time, and me over here is saying it scares the hell out of me. The AI agents. It's not just about like getting wiped out, but it's like, you know how many scams there are every day and how many people lose. I think we've already lost, I want to say, over $20 billion this year so far. Imagine AI agents and scammers are using them to go in there and try to scam people out. So now instead of just having one scammer doing it, now you have infinite amounts, and they can just keep attacking and attacking and attacking until you have a bad day. You click the wrong thing and you go to the wrong site and you do the wrong bridge, and then everything screws up. That's where I think that the next thing is going. If you're looking for the most successful investor, it's a scammer. He doesn't invest any money. It's just time in your screw up.
Yeah, that's true. Well, I honestly, I don't see a ton of other questions.
Great.
Social interest is really low. You know, no one really cares about this. There's dozens of us left at this point. I was actually looking at the social interest, and, you know, Bitcoin put a new all-time highs, and people just don't care. You know, no one really cares anymore. So
they do care about Ben and his little crypto skit, which was pretty funny. I recommend everybody take a look at it and watch it to the end because the bloopers are funny.
Well, the dozens of us that are left here, I guess, can go watch that. But there's really not a lot of people left. I saw a comment earlier. Someone said next cycle everyone's going to be a Bitcoin maxi, which, you know, might be true. I also could see, since this cycle has been sort of the Bitcoin dominant cycle, like, I wouldn't be that surprised if in the next cycle, you know, everyone expects it to go, the dominance rally to go on for as long. Maybe it doesn't go on nearly as long next cycle, because last cycle the dominance rally was a lot shorter. This cycle it was a lot longer. I wonder if it's going to go back to being shorter next cycle. I could see that being a change. Maybe the cryptoverse finally gets their act together and they actually start producing, you know, altcoins that provide value in, you know, more of a holistic sense, and not just all this garbage meme coin crap. I'm not kidding myself. I mean, obviously there's always going to be meme coins and whatnot, but I think, but I mean, also too, with how long, like, the tightening policy has gone on this cycle, I have to think that next cycle it won't go on nearly this long. But who knows? We'll see. Why don't we wrap it up there, guys? I think it's time to put a bow on it. We're near the top of the hour. Thank you guys for tuning in, everyone. Again, next week, this is going to be on Rob's channel, so make sure you guys go subscribe to Rob and Guy. Links are in the description below. Pleasure to have you here, guys. We'll see you guys next week.
Thanks, everybody.
Thanks. Cheers,
Good
everyone.
day.